It's now a tenants market in Sydney. I wonder why. Let's have a look. Good morning everyone, welcome to another episode of Heise Says. I'm Florian Heise, stein of coffee in hand, and I thought we would have a look at this article from Perth Now about tenancies or vacancies in Sydney, making it a tenants market. And let's just have a look here. Before we get into the article, I'll just remind you of what I'm calling the triangle of fail that we have here between Zetland, Mascot and Sugar Cube. Just the issues with residential apartment living there. We've got other ones appearing around Sydney as well. I just wonder if that has anything to do with, maybe it correlates with this increase in vacancies. So this is from Perth Now, and we'll have a read. So Sydney becomes tenant's dream as rental vacancies at highest levels since 2005. Wow. Now I remember the last time before we got our house, Rachel and I looked for a place to rent out here in Brisbane. We wanted something a bit bigger, and you essentially had to have your submission and everything ready on the day to put in place to make an offer to even get a chance, because there was such a shortage of places. We were looking for a little house, and then we went and looked for an apartment, and I remember walking into this apartment in where was it? Over near New Farm, and I thought, I'm getting a house. I'm not raising a kid in an apartment like this. Maybe I'm just too snobby, or how I was brought up to play in a yard. So Sydney is becoming a renter's dream as landlords grappling with the worst vacancy crisis since records began offer tenants massive savings and up to a month's free rent. Wow, what is going on? Listing figures show a record 25,000 rental homes remain untenanted, representing 3.5% of all rental stock, the highest since vacancies were first tracked in 2005. Now just think, this ties in to people at mortgage risk, in arrears. Think about it. If you've got an investment property and you're counting on that tenant's income to help pay for that property, and we've got a 3.5% vacancy rate, that's going to be a huge issue on covering those costs. Wouldn't like to be in that situation. Housing experts say the high supply of empty homes forced landlords to cut their prices to attract tenants. Yeah, that's how the market works. That's fine. Resulting in a 2.9% drop in median rent across Australia. So this equates to an average saving of roughly $520 per year, according to research group CoreLogic. So that's good that it's good for tenants. If you're looking for somewhere to rent, that rental prices are going down, that ties into cost of living. And Sydney, is insane with rental costs. Tenants were getting even bigger savings, in some cases well in excess of $3,000 a year, in building hotspots such as Ryde and Hills District, where there was an oversupply of new homes. Well, this is what's going to happen. I'll be interested to see what happens in Brisbane, particularly in West End, around there in the South Brisbane area, with all the apartment buildings coming up, how that's going to affect rental prices. They predict you'll make this much of a return in such and such a period, but then, oh look, wow, we didn't calculate on all this increase in accommodation or stock. Advertised unit rents in high-density hub North Ryde dropped by $70 per week over the past year, from an average of $650 per week to $580. That's expensive. This means tenants seeking out a home today would pay an average of about $3,640 less per year on rent than those who secured their homes last year. A 2-bedroom unit in this building in Belmore Street in Ryde is advertised with a week's free rent included. The rent is $550 per week. Well, there you go. The average drop in rental prices for houses in the Hills was near 4% over the past year, a saving equivalent to $25 per week or $1,300 per year. Landlord in Hill suburbs, Kellyville, were offering up particularly attractive deals such as a month's free rent because 7% of houses were unattended. What? The highest vacancy rate in Sydney. That is just insane, guys. Sorry about that. I need my coffee to get through this. Realestate.com.au chief economist Nerida Konisby said there could be even further falls in rent over the rest of the year because vacancies were mounting. Overdevelopment means there's a huge supply of rentals and more are coming. But there's also less tenants, she said, adding that Sydney's tenant pool was shrinking because more renters were moving interstate, particularly to Queensland. Well, there you are. There you are. Property cost of living is a bit less. Up to 4 weeks free rent. Mel Jensen, 42, recently got a new North Sydney unit for about $45 per week less than a near identical home in the same building. There you go. There you go. The landlord was very accommodating. They offered to fix up quite a few things before I moved in, she said. Tenants agent Marcel Weaver of Sydney Rental Search said renters will get the best savings on 1-bedroom and 2-bedroom units. Yeah, they would, because there'd be a damn oversupply of that stock on the market. There is an oversupply of these homes, and they take a while to lease out, she said. Other areas where renters were falling were the Stratfield area, which includes building hotspots such as Homebush. Unit rents dropped an average of 5%, or $30 per week, which added up to a reduction of $1,560 per year. Median rents in Sydney Olympic Park, home of the problem-plagued Opal Tower, dropped $40 per week, or about 7%. So now they're going to give us some hints on how to ask for a rent reduction. Don't be afraid to ask. Research what comparable units rent for. Show your research to a landlord or rental agent. Ask for concessions like new paint if the price can't be cut. Well, yeah. I mean, that shows you. That's fitting into all of this other stuff. All of the issues. People are saying that property prices will go up again. We've hit the base and we're going up. We're getting the secret insider information from the economists that work for the real estate, or for the real estate agents. And don't ignore the fact that rental return is dropping by 7%. You got to get in. You got to buy. You got to buy. You got to buy. I mean, come on. This stuff isn't that hard to find out. Aren't people looking? Aren't they putting the pieces together? Or maybe that's it. They're not putting the pieces together. Well, let's have a look at this from Domain Research House. Domain rental vacancy rate, May 2019. Tide turning in Brisbane and Perth. So, rental vacancy rates, this is the most recent I could get. Rental vacancy rates have eased lower over the month of May, off the back of a strong surge of vacancy rentals in April. All capital cities experienced a decrease or steady result, meaning there are fewer rentals available for tenants to choose from. So you can see here from June to August, this has changed. This has changed. Now we're getting different reports, and we'll have a look here. Rental vacancy rates in Sydney, in May it was 3.1, in April it was 3.2. But look at that difference. Look at that year on year. The rental vacancies has gone up year on year from May to May. And I'll try and find some more up-to-date data to look at it, but we can see here gone up in Melbourne. Brisbane, it's gone down. Perth down, down, down. ACT up, Darwin down. It'll be interesting to see what's happened to Sydney. If Sydney's going down again, that'll make yes, it'll make the year on year look even worse. It'll make it look even worse. So rental vacancy rates here, and you can just see in Sydney, in April 2017, remember this is 16-17 was when they had that huge massive construction of foreign investment in construction in Sydney. 24% of GDP was built in corridors of property in Sydney. It's insane. And what happens to our vacancy rates? I mean, look at it. It's just going up. It's just going up. What's that going to do to your returns? We're seeing it's going to decrease them. So you get a $1 million for a 3-bedroom place, let's say. Then you take off your council rates, you take off your strata fees, you take off your water bills, everything they charge you. Then your interest, the interest that you're getting, or the rental rates that you're getting, is going to be less as well now if they're dropping. If they dropped for the last 2 years, you may even have an empty place, you may be in arrears, or your return may be so low it's worse than a German bond. You'll be negative. So, but no, guys, it's still the time to get in. That's what they're saying. So, I guess it is, as some people said in the comments, it's just confidence talk. It's just confidence talk. If any of you are from Sydney, let me know if you've managed to get a reduction in your rent, or if any of you have recently moved or gotten somewhere, or if you've got a investment property and you're having trouble getting someone in, what are you doing to sweeten the deal? You know, discuss it in the comments, guys. Let us know. It's interesting to hear the anecdotes that people are sharing about their local main streets, how they're getting quiet. Anyway, guys, thanks for joining me. Like, share, and subscribe. Ding the bell, and I'll see you next time. Bye for now.